Welcome to TradeTheMBI.com. This is John. This report is for the 28th, and well, we had another exciting day in the market. And well, if we look at the daily here, you can see a GAM forming. But the critical component for me in looking at these, when you get this kind of flux situation where we've had this declining shakeout, the zones have been fantastic to utilize. We could tell that with the declining shakeout that the 50% wasn't going to hold on the return move coming down here once we started to see the steel dip below cyan, which happened right up here above the 61% line, and then broke down to the 50. And then I've said, hey, below 50, you want to be short. Below the 38, you want to be short. And then even below the 23%. Now, we've gyrated around the 23% here. The other day we had the massive move up. Moved above the 38%, couldn't hold it, so that became a soft spot at that particular point intraday, and then breaking below the 23%, we made just a return back. Now, we've seen this happen, though, under rising shakeout. We just hadn't seen a crossover yet of the green above red on the DOC here, which we now have. We're not getting, unfortunately, the orange coming below the red yet to give us what we would consider, one of these stronger signals like we had back here at the 38% for the GAM rising. So we're probably going to bounce a little bit more back and forth. The biggest problem is you don't have a reset of the steel, meaning it hasn't come from underneath, meaning your short-term buyers pretty exhausted within this general setup. But again, above that 23% is being covered by price right now. So I'll go ahead and give you the little window bar here that will help show. The 23% right there is at 26.1650. Above that point is a long. Below it, you want to be protecting yourself to the downside because there's more risk all the way down to that 25.34 low that happened way back here in the shock move. This is still better than nothing, having the rise. However, you're still below the 13.5. Now, that's from a daily standpoint, so you can imagine the significance of that within a daily move. But you can see the NASDAQ much better. You do have the orange moving beneath, and you're about to face that key midterm buyers crossing above shorts. That's a significant one. But the interesting part to me about this is not a major short push. This is just about not having buyers, the gravity, the weight of the market itself, just pushing on itself, which always exists, The rising euro, though, still should have been enough to keep supporting things. We did not get a retreat from it, continued to rise in the shakeout and that, so it's still euro doing just fine. The flight to safety in Treasury is always the case when you have this kind of erratic behavior, people just pulling aside to cash as they wait. Oil, that inflation story down the road is certainly going to be a factor for market multiple as far as, it does impact growth. We haven't seen that be a negative draw yet, but towards the summer, that's going to be an interesting visual to see how the inflation aspect of it is really incorporating itself. And if we get the tie-in with labor rates rising, that will put additional pressure on interest rates higher, though they've automatically said they're going to be increasing them just because why not? Heaven forbid you want to actually have growth, even though you haven't really hit an inflationary target. And gold is going to continue to move back and forth, but it's well within a buy configuration, and it should continue to climb. There's no reason why gold shouldn't accelerate. Also worthwhile looking at Bitcoin. We follow the descent from, all the way up at, the high 16,000 mark, all the way back down. This was, of course, going to 1 million. It may very well still, but it's certainly dealing with a bit more resistance now that it has the futures trading on it. It provides just more opportunity. It's still a very thinly traded situation. This little pump right here, you can see in positive extreme, so it's likely to come back to that just under 8,000 move again. That's just going to be about how thinly it's traded. So we turn to the 5K. Wow, I just would have to shrink this just a dramatic amount to look at what happened the other day. So we ended up with a nice little peak move that was starting up here, and we had talked about the rising shakeout readings for being able to enter and run. Made a brief move on this one, but it was not sustainable for very long as we ended up with the DOC spread that took place, well, slightly below it, so it was a little bit softer on that one. Took us to the lows. We ended up with several little decent pop signals, but all of them were coming off of steel at a higher level, so you really can't expect more than a zone or two movement on them. Typically, usually, if you get to the 50%, you've done pretty good on that kind of configuration, and you just hope that you can get the follow through. But they weren't really very sustainable moves until later on, so it was kind of an accumulation taking place through here. And then we ended up with a nice move here where we just continued to accelerate. And then we got to serious time as we reached the peak. I was pointing out this short that I was following through with, where we ended up with a violation of the never short with the magenta over 13.5 along with rising gold, as well as the cyan under red, because that is typically always long. And while it started out with that, what I was talking about was taking advantage of at the high, shorting right up at the peak of the move and looking for that because you had the declining shakeout going on there. And it took a while for it to actually develop. I mean, it went across several bars. But if you're up at the peak, your risk is only just slightly breaking into a new high. So it's a little bit riskier configuration there, but I wanted to point it out, and I put it on the Skype chat, and I'll link the little description. We did get a return to the 50% off of it, and then we ended up with a similar situation that occurred a little bit lower value after a brief little run up right there, and that one turned out to be the waterworks, where we ended up with some significant dips of the shakeout below the negative 13. Even with the dips right here, you were still having shakeouts moving lower. Which is not a great buy configuration. You're going to get just tiny little pops out of that. And so at that particular point, I could see that we hadn't achieved a 38% break, and I was using that as a follow stop going all the way down. And it wasn't until we got the ABM reset all the way down here that that actually became interesting, where we were finally starting to get improvement of shakeout, and then it moved above the negative 13.5, and finally had a little bit of weight with it. But this, again, with the lack of the steel retrace, it is likely to be choppy whenever you get that kind of configuration. And in fact, it was. And even though it moved back up to the peaks with the falling highs here, you still had new lows being made. So even when that's happening and you're breaking down to new lows, you're not going to get that return up. And then we finally got it to where the low pretty much stabilized, and then you had the declining highs, and it rose to that point. And then it wasn't until it did it again that we finally moved back up to the peak, which is exactly where we're at right now. And again, I had talked about this 2621, which was something that was happening from well, a couple of days ago from the trading. But again, lowering that to that 2616, which you can see is just literally right there, 2616.50. And let's just increase the size of this one, because this gets us into the pre-market. And look at this volume already in pre-market is pretty significant heading into the open. We've actually got a little cyan under red dip here. So that's likely to continue to break above in the range situation, as it has the strength of cyan underneath there. Not quite overbought, but pretty darn close. It's a very significant warning, but if it's still making new highs, it's just going to be perfect for an algo retrace marker, as I like to refer to it. So the interesting part about a lot of this action was the thin trade that was taking place. It's just we were having big moves in a matter of seconds, but they weren't translating into new bars, simply because it was mostly the bids getting pulled, and it was just gyrating back and forth. Provided some nice fun opportunities for scalps in that, but kind of dangerous if you're really looking for a disciplined trade aspect. And so this is where I always suggest, sometimes you got to wait for really solid setups when it comes to this kind of volatility, particularly when you're under your resistances from a daily. And that's why it's worth just noting those. And that's why I always kind of like pop back to the daily. And it's like, okay, I got these key numbers. You can just put them down. It's like, I'm above there, then I've got a little bit stronger. So when I see a buy and I'm above that, okay, fine. I've got a little bit of that support line. It's not even really a support line at this particular point. It just comes to be a pivot point, and trading against them becomes an effective approach. So just keep that one in mind. I'll keep posting the charts of relevant things, unique situations that pop up with the readings and that, and we'll go for there. I'm working on trying to program these as a function, because there's some members who want to see if they can put them in their own programs. If only the math was simple enough that we could just plug that in, but I'm still working with it, see if I can get it to take place. So we'll be doing renewals for next month. It's been quite an exciting one, especially from these intraday readings. It's been very effective. As always, though, trade well, and look for me on the Skype chat.